Welcome back to the Vires and Numeris podcast, a Bryer.io production. Special thanks to those that power this podcast each and every episode. Currently, our sponsors here, you can check out the audio versions on our website. Currently, our sponsors for this episode, CheesecakeSwap.com and Flashcoin. Cheesecake Swap is a decentralized AMM and yield farm platform running on the Binance Smart Chain. If you haven't checked them out yet, they are doing some great things over there. As always, not financial advice, but they currently have just under $7 million locked and have been climbing since launch earlier this year, peaking at over $3 or $4, close to $4, I think, on total value of their coin. But currently, the token is worth $1.62 at the time we're recording here. 0.75 is the block reward. Market cap $3.3 million, and the supply just over 2,064,213. So they keep the supply low with burns. And they have a lot of different pools in there. If you're looking at staking, single-sided staking, the rewards on their coin, APR 94.51%, APY 157%. They also have BUSD, BNB, BTCB, ETH, DOT, SXP, Uni, Link. They have some of the best projects in the crypto space available, so check them out. Second sponsor today is Flashcoin. Flashcoin is a reinvention of Litecoin built to scale for worldwide commerce and fast enough to handle everyday transactions. The flexible and easy to integrate core code allows exchanges and wallets to add Flash to their platform within hours. With a settlement time around 5 seconds and consensus within 2 minutes, anyone, anywhere can use Flash Mobile Wallet as easily as cash or credit card. Check them out, flashcoin.io. Their mobile wallet, they have their own mobile wallet application, which is easy to download. Check them out. It's one of the coolest wallets I've seen in the entire crypto space, with a peer-to-peer map of merchants accepting Flash for goods and services. So check them out over at flashcoin.io. That's flashcoin.io. And please buckle up for this episode with Lunar Crush. Joe and John from Lunar Crush, in this episode, they drop a lot of knowledge on the data they've been collecting over the last year and putting out from their social media channels from the social media channels that they use. They're on pretty much every platform that exists. We talk about that in this, and we talk about the potential of a super cycle and all sorts of different stuff about legacy institutions and the inevitable push towards DeFi. So I hope everybody enjoys this episode. Let's get into it. Welcome back to the Vires and Numeris podcast, episode 38, with Lunar Crush, Joe Vizani and John Farjo. It's their second time on the podcast. Welcome back to the show today, guys.
Thanks for having us.
Happy to be here.
Appreciate you guys showing up. What's been going on since we talked about 8 months ago? What's been going on with you guys? If you just want to talk about what you've been up to.
8 months, man, that feels like about 8 years.
It really did. Yeah, I looked at it before we got on here. I couldn't believe it.
It's crazy. Yeah, I mean, where do I begin? It's been fun, for us, I think, over the last couple of months in the space. And, there've been some pretty key things that have happened. And, even with, everything 2020 and COVID and kind of pushing, the world 5 years ahead in 1 year, I think it's been, we've been pretty fortunate to kind of be a benefactor of, the work from home economy and, the kind of rise of institutional buying of crypto and, the Wall Street bets mentality where, some of the stuff we've been preaching over the last couple of years, people are starting to kind of see the light a little bit and understand that, community is such a driving force in capital markets and in crypto specifically. And, as we've moved towards kind of this tokenization of everything world, it's really just startups and new businesses that, go public day one, really is what it is. And how do you decipher, the difference between those businesses and who's building something interesting and who's, maybe not creating the community. And so, I think our mission is of kind of creating transparency, and without a community, there's no crypto is stronger than ever.
It's a great explanation. John,
Do you know the date that we were on last? Just curious.
I just know it was 8 months ago. I don't remember the exact day, to be honest with you. I didn't catch that part. I just saw 8 months.
Well, so I'll call it let's call it September. And what's crazy is the price of I'll throw out, say, Chainlink, since I know you're so into Chainlink.
Okay.
Was it hit $8.75. And
Yeah,
so
seems like we're in a different world, right?
It's crazy because a lot of our narratives haven't changed to the people we know and talk to. And I think we would have said Chainlink's looking very bullish when it was $8.75. And a lot of people went, that crypto's risky, that crypto's scary. And I think look what's happened between then and now. It's been life-changing for so many. I think we're all very lucky to be in such a positive space in the world right now. And I don't think people talk about that enough. We're all surrounded by people that have had life-changing experiences over the last 6 months. And I think that's a far better place to be than I think anything else. So what's changed? I think everything's changed. And on top of that, I also remember being asked multiple times, like towards the end of last year, what does the crypto market look like? Like, who is in the crypto market? And I think, going back to when we were on your show last time, I think we would have described what a typical crypto investor looks like, and maybe would have described a typical crypto developer or a typical user of crypto. And I think between then and now, that's probably what we've seen change the most, more than anything. There is a fly in my room here. We've seen it change more than anything. I might kill it in between here. We've seen that change more than anything, because now we're seeing everyone's in crypto. Mark Cuban said a banana had more value than Bitcoin, probably around the same time we were on your podcast. And now he's going all in on Axie Infinity, an NFT platform, and building his own NFT platforms. And the Mavericks are accepting Dogecoin, and Elon's putting a rocket on the moon with Dogecoin. So everything's changed.
Yeah, it's definitely seemed like we're pretty fortunate, like you mentioned, that we were doing all this crypto stuff for years leading up to this, and then with Bitcoin being the macro, it's very predictable to some degree, but with COVID, like you guys mentioned and stuff, and it's just all unraveling and kind of been expedited. So we're definitely in a fortunate position. I mean, we're not lucky. I wouldn't say that. To a degree we are, but we definitely put ourselves in this position. So the people that are a little more forward thinking, I think, are definitely, benefited a lot from what's been going on, despite a rough time for the majority of people. What have you guys learned, like, over the last year about, like, your data and just overall, like, or the data you guys are collecting overall? Like, what sort of trends are you looking at?
I could probably let John start with that one, but my dad always used to say, luck is where hard work meets opportunity. So it's a good way to kind of think about, like, positioning yourself. But
I think, gosh, man, I left out the biggest thing. So I'm going to answer your question by saying, I'll start by talking about Wall Street bets. And I think what was so great about that was it exposed that individuals have way more power than they thought. Some might call it a mob mentality. Some people might call it irresponsible, right? Those people are usually working on Wall Street. Or working for the government and saying, this needs to be regulated. This is ridiculous. Well, the reality is, you start to look at some of the shenanigans that happened with GameStop and Citadel and Robinhood, and you start to see, like, the system is actually working against you as an individual, as just, the individual person trying to invest to make their life better. And so I think the world in general learned a lot from that. And I think one thing that obviously helped us a ton, because it started to say, hey, you know what, maybe this paying attention to community signals is important, just perhaps. And one of the main reasons we started Lunar Crush in the first place is just perhaps you should be looking at more than just the price and drawing lines on charts. Just perhaps there's something that you should be understanding more about this, what you're investing in from a community perspective. And so what we've seen more and more is just the correlations between social activity and price movements just keep increasing. So if anything, that's in general what we're seeing. I mean, I could talk about specific projects and certain trends that we're seeing, but I think we're seeing that combined with, at the same time, we're seeing things like explosion in DeFi, an absolute explosion in DeFi. The total value locked in the DeFi ecosystem is just enormous now. There's so many projects, that, to be honest, for every 199 sound the same to an average individual, until you start using them and then you realize, oh, there's that nuance that's different and that nuance that's different. And I think the bigger thing that to remember is just that the DeFi ecosystem as a whole is absolutely soaring. Like, it's huge. So I think that's a big trend that we've seen. And another more recent trend, which is probably the craziest thing that we're seeing, is the rise of the meme coins, which has really taken fire over the last couple of weeks. So that's a really big trend that we see.
What has been, like, metrics wise, what has been more popular over, like, I mean, you saw the big DeFi summer of 2020, and now you see this meme coin boom that you've just alluded to. What has done more volume and that you're seeing, like, in, the social posts and stuff?
I literally have this up right now.
Nice.
So if we look at like June of 2020, across the entire crypto market. So this is any sort of cryptocurrency mention across Twitter, Reddit, YouTube, any news article, Medium posts, YouTube, if I didn't already mention that. And we're looking at like anywhere from like 170 to, like, on a bigger day, 215,000 mentions across those, and social engagement. So social engagement is like the retweets, the likes, and like everything else that's kind of like viral on top of that. And if you look at that, you're looking at like 580,000 or 580 million engagements across those. So 200,000 social volume, 580 million engagements. You look at like the last week, we're at 1.2 million in social volume, so like 6x, and we're looking at 2.5 billion engagements. So we're talking a heck of a lot more volume now across all of social, like much more volume across social than anything else.
What do you think, like, what did you see on the DeFi summer? Like, how long did that take to unwind, like, as far as like social media posts? I mean, you might not have that pulled up, but I'm sure you probably have like an idea of these trends. Like, do you anticipate this meme coin trend to continue throughout this year? Or what do you think about stuff like that? Do you kind of like try to anticipate that stuff, or you just follow the data really?
So there's a couple pieces here. I think one thing to look at is, if we were looking at like the intersection of this, I'd say it's pancake swap. So if you look at the intersection of memes and DeFi, they've got a lot going on there. They have a humongous community around pancake swap, with the backing of Binance, with low fees, which is a huge issue right now. Gas fees it's unusable right now, period. Right. I mean, like last night I had $200 and something gas fee that I saw. I saw other people were getting $1,200 gas fees last night for simple trades.
I paid almost a $500 premium last week, so I know what you're talking about. Yeah.
Try buying. I was just talking to someone that's been very successful over the last little bit with NFTs, who their business has come to a crawl because the gas fees are higher than their actual NFTs. So we've got that going on right now. But I think Pancake Swap is a really good example of something we keep seeing come up a lot. We saw it come up before any price move, constantly. We saw Dogecoin come up before any price move, constantly. We saw Shiba Inu coin, which is now up over 1,100% this week. We saw this 2 to 3 weeks ago. So because these are so heavily correlated with community activity, the prices, and they're not alone. There's now, with the success of Dogecoin, there's tons of copycats. There's tons of just a slight riff on the tokenomics, but it's the same. More and more are going to be coming out, a lot more, because when one's successful, it breeds copycats, it breeds competitors, it breeds them all saying they're better than the last one.
Is that a play on dog breeding, John? Did you mean that?
It is. I'm promoting my new Shiba Inu, breeding facility that we're going to get going.
Yeah, I mentioned that.
Don't give away the secrets.
That's true.
Yeah, I mentioned that coin in an article I wrote for today. It's unbelievable what some of these mimic coins are doing now, just to piggyback off that Doge success. So, what do you think the average person is missing about this market right now? If you had to say one thing, you guys see so much. I feel like you have this aggregation of data that it's just before you. I'm sure you have all sorts of insights that the average person is missing out on.
Well, it's their first market. Most of these individuals, we were on, I don't know, combined between Joe and I last week, probably 12 hours of Dogecoin Twitter Spaces last week. I was on one talking about Shiba Inu for a little bit, and all these things are happening. The thing that you start to realize really quick is that a lot of these investors are brand new. They're very young. They have not been through a downturn in anything before, even including the coins that they're in right now, because they were in the middle of a bull market. It's a little scary, because we're seeing these audiences that have never been through this, and they've just received a 30,000% bump in their holdings, and they're still talking about not exiting at all, and that it's just going to go higher. They set these arbitrary price targets. They never say and then what they're going to do after. Right. But these arbitrary fake targets, I can't tell you how many people were saying that, using Saturday Night Live as an investment thesis and saying Dogecoin's going to $1, Dogecoin's going to $1. Well, Dogecoin then went to 42 cents or something not long after that. And I think, it's crazy to me to say you're taking nothing off the table. You're not paying for any part of your life. You're just letting your profits constantly rise because you're so mentally surrounded by other people that are all bullish. It's kind of that have never been through a down market before. That's a pretty scary place to be. It's very risky. Just being dead honest, it's very, very risky. It's not that it's going to go higher or lower. It's just very risky.
If you haven't sat through a 3-year bear market, you really don't know that pain until you do it. So, Joe, do you have anything you want to add to that?
I was thinking along the same thread of that, I think kind of like what I was saying at the beginning of, crypto is, and just the decentralized, world and all the tokens, and, we're seeing a lot of the actual true use cases for where the double spend problem actually makes sense. And then we've got, 1 million new people buying Dogecoin on Robinhood, right? Because it's accessibility when it comes to some of this stuff. And, on one hand, I think that's important. I think it's important to bring new people into the space. Would I have rather had all of those people, learn how to set up, private keys and learn how to send something to different addresses, and then, hopefully start, those kids become the next generation of developers and builders in the space? Yes, but it's still, I still think it's not a bad thing. It's kind of the same thing as what happened in 2017, where, a lot of people got burned, but, even if 5% of those people, are now launching the cool next generation products, that works. I think there's, there's just something very interesting in the space happening right now between, large institutional companies buying billions of dollars of strictly Bitcoin. You've got, DeFi protocols that have more capital under management than, most large size banks would. And their lending is, trustless, and it's cross border, and they're growing faster. I'm advising and talking to a bank right now who wants to buy, $500 million in Bitcoin. And they're like, well, are there people out there that we can acquire? And I'm like, these people have already passed you. These some of the Compound or the Celsius, and some of these people, I was like, they could buy you, and you don't, and they're going to grow exponentially faster than you're going to grow the next 5 years. So you have to find something even smaller and go attached to that. But they are just so ill-equipped to make the right decision because they haven't been playing in this space. And so they don't really understand. And at the end of the day, you know, it's not that they're going to go buy these people, because it's just not going to happen. These people have coded out the 15,000 person workforce at these banks. And I think there's going to be some really interesting disruption that comes along those lines that I'm kind of looking towards. And then I think we're going to, like everything else, every market that's had a downturn or has changed, we truly don't know where it's coming from. It's going to be something that none of us can predict. And it's going to be oh shit, like I didn't see that coming. Right. And that's why it's like, I'm a little bit less worried about the, you know, like one of the governments coming in and kind of like maiming Bitcoin and stuff like that. All these predictable things that I think people think are going to happen. I'm kind of keeping an eye out for something else. And I think that that's kind of the narrative right now. Cause it's like, if you talk to anyone in the, any of the insiders in crypto, it's like, well, how long is this bull market going to last? You know, you're starting to kind of hear those conversations a lot more, but when those things start to happen, I almost start to think like, well, maybe it's just going to keep going, right? And maybe this is just what 8% of the population feels like being in. So I don't know if I correctly answered it, but it's like, those are some of the things that I'm seeing.
Yeah, it's like what's that saying? Like the wheels of justice, or like the government churns slowly, and it's like now the free market churns a little slower than DeFi and stuff. DeFi is like the free market on steroids, right? That's the way I look at it. It's like expediting everything we do. So it's pretty crazy. What have you guys seen in terms of like exchanges and stuff? Are you seeing like more? Have you noticed anything like in particular with like just DeFi overall? Like, are people still talking about centralized exchanges as much at all, or has that stayed steady, or has it fallen off? You know, I know DeFi is going crazy, but I'm just curious, like with the influx of new people, do you see like certain trends like centralized exchanges? Does that just go down, or does it stay kind of constant with the new money coming in?
It keeps rising. It keeps rising. Like it's just everything across the board's rising. I think some interesting things that we're starting to see though, like let's take Dogecoin, what just happened. We had like US specifically. In the US, Coinbase didn't trade it, right? Coinbase's stock actually went down during that period of time. They weren't getting that Dogecoin revenue, and Bitcoin not traded quite as much. It's a different narrative. Like Bitcoin, it's almost destined to have less trading volume if you think about it, because more people are hoarding it and holding it. They don't day trade it. They don't like it's just the narrative is not there. Versus Kraken has been making so much money trading Dogecoin. Gemini now offers it. So I think you're starting to see these kinds of things that are happening. We're seeing some of that with FTX. We looked this morning, FTX had higher trading volume than Binance earlier today. And it's like, I think you're seeing that grow like crazy at the same time that the DEXs are also going crazy. But I think that we're also seeing a lot more the trend towards lower cost, lower gas fee types of layer 2 types of DEXs, like Unilend, for example, works with Matic. We're seeing things like that. I think it's really kind of crazy when you think about just the different types. You almost have to create personas out of the different types of individual crypto people that are out there. And, it's back to like these buy and hold, like the Bitcoiners, the enterprises, the big financial firms that are beyond Bitcoin and they're moving into Ethereum. And I think that's kind of its own group versus the people that are, going to day trade Dogecoin and SafeMoon and Shiba and et cetera, et cetera. There's really these kind of buy and hold and stack and stake and all that. And then there's these people that are like 18 trades a day. And they trade in very different places. So,
yeah, just to build on that a little bit, like, you've got on-ramps, right? You've got these like on-ramps for people to get their money into the system. And then I think what you're seeing, at least from like the more savvy investors, is, the centralized exchange makes sense for people because that's where you can go get a lot of different tokens. So depending on what you have, you can swap it and it doesn't matter what protocol that you're using, right? So it's like a lot of people get tied into their MetaMask wallet or their ZillPay wallet or, whatever wallet that they have. And then they're like, okay, I can swap there a little bit for my ERC20 or my ZIL tokens or my ZRC2 tokens or whatever I'm using. But then oh crap, I want to go buy this other thing that just came out, right? Where do I have to go get that? And then people are like, okay, well, which exchange, maybe did I use from 2015 that I did, that still has me trade or something. And then they kind of, they decision make that way, and then they go get that token, right? But then I think the savvier people are then instantly moving it out of that exchange because they probably moved it to something that, hey, I'm going to go provide liquidity over here and get a return on that. Or, hey, I'm going to go stake over here and, get my return on that ecosystem and be a part of that ecosystem. And so I think it's like, there's all these different tools out there for what people are doing. I think I've seen over the last couple of months, though, a lot more interesting kind of plays on the exchanges, especially like the DEXs. Like I'm talking with a bunch of folks from, or some members of like Orion Protocol. We just talked to WooCommerce and DYDX, and like, I think there's some really interesting plays on kind of more of the DEX, but I still think that they run into the issue of kind of like atomic swapping and cross chain and everything. It's like, but I think that's why I think there's a massive opportunity. Like people like probably underestimate someone like an atomic wallet, right? And the ability to kind of move around in there a little bit more. So I think there's things there that's people have underestimated, but honestly, like Coinbase, like if you go look at Coinbase and you go look at like some of the news that they provide for some of the tokens, it's from like 2019, right? Like some of even the things that they're listing, because they've paid a lot of attention, because it's like, hey, they went after when Tesla wants to buy $1 billion in Bitcoin, you go to Coinbase, right? And it's like, that's the market that I think that they got tied into, which I think is a massive market. But like we were saying, Wall Street bets and everything else, that's not doubling down on like native crypto, right? And so it's like, you're going to see something else kind of pop up, and then depending on which direction the world goes, either one of those players is going to win.
What projects are you guys watching closely in particular? Then I don't know if you want to talk about what you're investing.
John, give all your buy calls and price targets. Go.
Yeah, here's my portfolio, and I'm going to go through it one by one.
Pull it up on screen share.
If you could just go ahead, I'll enable screen share.
No, I'm good. I think what are we watching? I think that I keep saying it recently here, but I'm watching things that are building brands. We're in early stages on many things. And, for example, if I told you right now, I'm not going to tell you the name, but I said, hey, I'm going to build this DeFi platform that's going to have really great yield for everyone. You'd be like, yeah, so what? Like that's great. Oh, my ticker, my name is Yield and my ticker is YLD. And then you start looking it up and you realize, wow, there's like 3 other projects with your same ticker and the same name. One's Yield Coin, one's Yield App, one's Yield Farm. Are you sure you want to do that? So that's the stuff that concerns me. That is not a ding on their business. A lot of these have great ideas, great platforms, great technology. They have no brand. So I'm concerned with anything that isn't doing that, because what we're seeing right now, I will say Dogecoin is the first brand that crypto has ever seen. Not Bitcoin. Bitcoin's a religion. Dogecoin's a brand, and people don't like it. People hate it. There's a lot of people that hate the project. There's a lot of people that hate what's going on here. They hate the people that are coming into the market. They hate everything about it. But they built a brand, and now Slim Jim and Budweiser, et cetera, Oakland A's, Mavericks, and on and on and on and on and on. And there's not even that much utility here. There's nothing. But the reason it's important is because if you have such a big community, and you can build that community out, you can create utility and you have an audience. What's really, really hard to do is to build a community. It's obvious that I don't want to say it's easy, but it's not impossible to create a crypto project. It's not impossible to create a token or even a platform. It's very possible. Almost none of them have a brand. And so what you're starting to see is you're going to see the marketers come in. I mean, look, when Slim Jim and Budweiser are talking about something and professional sporting teams are talking about something, it's a big deal. When you look at something like a Chili's, I'll throw that out there. Not only do they have a brand, they have all of the teams they work with and the leagues and UFC and all this stuff to help push them higher. So I get very concerned about anyone talking about how they have the greatest technology and then they have 15,000 followers on Twitter and they post once a week and their website sucks and they kind of have a marketing person sort of, part-time. I mean, they're no joke. We've live streamed with people that like present themselves as like head of marketing. And then you actually look at them on LinkedIn and you realize that they work in logistics. And I'm like, wait, so your project's worth like $600 million and you're the head of marketing part-time? Like, I get really, really concerned with that. So we're past that. We're way past that. So I think just in general, we look at things that have a community. You can't fake it. You know, you can't hire people to spam everywhere and then build a brand. So I think that's just in general, that would be my advice to anyone listening. Look for that.
It's good advice. Joe, do you have anything you want to add to that?
I mean, I think we've seen a lot, you know, when you talk to a lot of the kind of VCs in the space and, you know, a lot of these investors are looking at kind of infrastructure plays, you know, it's just kind of like, and I think it's because they probably did so well on the first round of that, you know, and like layer one type stuff. And then you've seen a lot of people, you swatting that fly away, John. John's swatting.
This is like, am I gonna have like the?
Are we on camera, by the way, or is this just audio only?
It's definitely video. I'm gonna have to. The thumbnail will be with the fly on his head.
Is it gonna be like the Mike Pence fly on his hair? It's like it's killing me.
But yeah, so it's like, you know, a lot of those investors, I think, are paying a lot of attention even to that still. And, you know, it's like, it's a different fight for those protocols now, right? And it's like, everyone's got the same narrative, you know, because it's a lot of it's, you know, hey, we're going to steal all these developers away because we're using the same language as Ethereum and it's like gas fees are lower or something. And it's like, you know, Ethereum could, like, if everyone stopped colluding, you know, the fees could go down. Right. And so it's, I don't know. It's like, I don't know if I'd be making huge bets on, you know, the projects that are trying to steal people away from something that like potentially is going to be solved. You know, I think that's like a very, like, that's the assumption in your pro forma that like as an investor would scare the shit out of me. But I think, you know, a lot of these big time investors and these A-list VCs just see another infrastructure play and they're like, okay, this is going to be really big because you need the developer base. And once you have that, cool apps come out of it and to be the underlying protocol of that. Now, if you have some sort of kind of special sauce to the way that you're doing it, you know, like John's talking about, it's like, you know, I'd rather see a lot of these, you know, that's the thing with Ethereum and Solidity is like, hey, like, yeah, sure, we're going to go into this like developer community and that's the fuel to the fire. It's like, I'd rather see a lot of these people, like their grant processes are way too slow. You know, the way that they do the deals are terrible. You know, the price volatility that happens, they can't figure out the price of where anything's at because you're getting paid in their token. And then it's like, well, you know, this new developer, because developers are $300,000, you know, a year, wants to get paid in US dollars because they have a family and I can't pay them in Shiba Inu, right? So it's like, now they're stuck in that place. And none of the infrastructure protocols are helping people through the business part of what they're doing. And so a lot of that stuff's going to fail. And, you know, that's why it's like, I love a lot of that stuff. And I think that there's going to be another couple winners out of it, but I just, you know, that's not what excites me right now in the space. I think, you know, in a weird way, it's like some of the, like the meme token type things kind of excite me in a way. Cause it's like who knows what's going to come out of that? Like, who knows, like how you're going to spark the interest of some 15-year-old somewhere in the world that's like, oh, wow. Right. Like, what else can we build that's different and that's exciting? Cause it's like, you know, I feel like it's that episode of Silicon Valley, which I know I've repeated, and John, you probably laughing all the times it's on Slack, but it's like, you know, we're changing the world through, you know, low, mo, slow, or mo, low, slow. Like it's all the same thing. And like, that becomes just an echo chamber of non-excitement. And so, you know, I think we're back to this, like, where does this market go next? And where does the growth come from? And how do we get the people excited to build like new stuff? Because at the end of the day, there's still a million different applications for, you know, this double spend problem. And we're just scratching the surface. And so, yeah, I think my answer to that is kind of like, I'm really looking, you know, we were at a precipice and I'm really paying attention to what's out there. I don't think I see it yet over the horizon because I still think that there's so many new people entering the market. Like John was saying at the beginning, like we're on these streams and we're like, these are people that are like, which is a good thing. It's like, this is what we wanted in crypto. It's kind of like, oh man, I really liked Dave Matthews Band in high school. And then like everyone else started to like him and now you don't like him anymore. It's like, no, like they're still really good and we're all playing the same tune. And it's like, what, did you just want to be like the tribal hardcore people in the corner? Or did you actually want crypto to go mainstream? Right. So if you're fighting against this, it means that you really didn't believe it in the first place. And so, you know, it's like, I think maybe it's like this next like level, like education that needs to be happening with some of these people that are coming on. And, you know, that could be the next rise. And like maybe our responsibility as people that have been in the space for a while to help these people.
Two great answers. I think that I totally agree with what you said there at the end about the young people coming in maybe, or the new investors with Doge. Like that's the net positive I take out of that too, is like these people that weren't exposed to this industry before. Now they, you know, we have these cycles and a lot of people end up sticking around. So I think that this sort of thing is just great. You know, maybe the next great mind is going to come out of the Dogecoin and we don't even know it yet. I mean, you can see that story unfolding probably.
Yeah. There's no financial literacy taught like anywhere, right? Like ever. Like you don't learn it until, you know, if you're lucky enough to have your parents or an uncle or an aunt that teaches you something about how, like most people don't even know how a credit card truly works, right? And so it's like, at least like from an education standpoint, maybe it's not great to teach someone from the outset that when you put $5 in, suddenly you have 5,000, right? Because this is one of the first times in history that's ever happened, right? Mm-hmm. So it's like, that's not a great lesson. But I think the good lesson is, you know, how do you teach people a little bit more? And like, you know, if like last year with people learning about inflation and people that I never would have thought would ask me, you know, what happens when the government prints all this money? Like, where's the money come from? And like, what's a buyback? And I was like, wow, like this is language that you never thought folks that may, you know, be working in an industry that has nothing to do with finance are now asking. So maybe this does something similar with the younger generation, and maybe we can bring some more financial literacy.
Absolutely.
You know what's interesting about that too is take the flip side of that and take someone like a Michael Saylor and MicroStrategy, right? Super expert into finance. Like he's already way deep into finance, master, looking at the model differently and going like getting angry at people doing all these stock buybacks. And saying that's just stupid. That doesn't make any sense. And that's not how you're going to get returns for your shareholders. And flipping the model on its head and going, no. Like, let's go over here. This is how we're going to make all our money through Bitcoin. And so it's like, it's kind of just, it feels like all walks of life is just diving into our space from different angles right now. But he's certainly not getting into, you know, Michael Saylor is probably not invested in refinance and a good portion of the Polkadot ecosystem. and so it's really interesting. I think what we're really witnessing is like business models, economics, capitalism, all of it across the board is being redefined because of this and this technology. I think a lot of people just don't know it yet. And that's pretty exciting when you really think about it, when you think of how many young people are getting in, and you think of all of that together, combined, rolled up, it's sort of like, I know maybe we've all been here for too long to think like what's happening now with the meme craze it seems crazy because we've been here. But if you're new, it could be the norm and we just don't know it yet. And so we might make fun of it and laugh at it and go, wow, that sucks. That's stupid. Well, you know, you just missed 30,000% return or whatever it is on Doge. So while you were laughing, and if it dips, you know what's going to happen? A lot of these people are going to buy it because
it's true. They're definitely going to do that. What's interesting too is you bring up Michael Saylor, and it's like maybe we should have a little more patience with these people. And I do try to like educate as much as possible, but it's interesting because even a billionaire, like a tech billionaire, nonetheless, Michael Saylor just showed up. Like people forget that he hasn't even been in Bitcoin for a year now, you know. So or maybe this is like a year now. So it's like. Yeah, a lot of these people, you know, just because they're showing up now, it's, you know, they're not dumb people necessarily or whatever. It's not all dumb new money. You know what I mean? So
right,
it's interesting.
I mean, look at the number of CEOs of publicly traded companies. How many are in Bitcoin right now? How many are in Ethereum right now? It's not a lot. It's not a lot at all, and it's growing. But it's growing. But it's growing at a time when the the economics of Bitcoin and like are such that it's going to get hard to even get a substantial portion of Bitcoin in your treasury. Like to even buy large quantities is only going to get harder. So, you know, it's like the world's never experienced this before, because in every other cycle of any other asset that's ever done that, with growing community and finite supply, we've never seen that. You know, if the oil market goes up, you know what happens? They drill more oil. You know, there's more ships out there full of oil, and they're just going to keep flooding the market with oil. Gold, they're going to keep mining more gold. Bitcoin, nope. There's nothing more that they can do. And then as that becomes difficult, what do? They start buying Ethereum. And then after that, what do they start doing? They start buying everything by Chainlink.
Yeah.
The value, you know, Chainlink's a really phenomenal example of utility. Like there's not another Chainlink out there. I mean, and I know that there's other oracles and different things out there, but man, like Chainlink has done everything right in my mind. I look at what they've done. We've been following them since the start. And if you look at Chainlink, they're almost the original meme-based community. I mean, the memes of, you know, Sergey, and then there's fat Sergey, there's Sergey with a bunch of women, there's Sergey and this and that. It's like Pepe. It's amazing. It's Pepe. It's amazing. That's a community. That's a good example of a community that's done it very, very well, and it's fun. It's all lighthearted and fun. I mean, to be honest, like the community is really, really tight. They stick together. You see the same people that are influential, and man, humongous utility. So they're a good case study in building a brand where like they're doing it right on all sides, not just you know responding to your every tweet with their ticker. There's more to it.
100% agree with you. I just have a couple more for you guys because I know you're running through like the gambit or whatever today on these podcasts. What do you guys think? Joe kind of alluded to his a little bit about how he feels about this cycle, but he didn't give me a definitive answer, so we can try to pin him down here. How long is this going to go? Because I'm not a proponent of the super cycle personally, but as we have seen more and more money keep flooding into this market with the paper, I didn't know that we were going to have obviously nobody knew about the virus, and we were going to have all this central bank printing at this point in the cycle. We're ahead of where I thought we'd be still. So I'm wondering, like, my goal, my target was always 65,000. I'm, you know, like you said, these are arbitrary targets and stuff, but like where I thought we might hit in this cycle was 65K, and we were like $100 off of that. So what are you guys looking at in terms of like, how are you trying to play it personally? You know, not investment advice, but what do you see? Are we going to go till the end, wind down at the end of this year? You think we could see a super cycle?
I mean, like if you look at Bitcoin, I guess I could start there. It's like, you know, March 11th, you know, we're at 57, right? And we're at 56.5 right now. So we're about 2 months into kind of a flat-ish market. You know, that's a good, you know, 2 months in crypto land and market land. And these days is a long time, right? So it's like, is this some sort of consolidation? You know, I think there's a lot of these larger companies are probably looking at this inflation thing pretty tightly. And I think, but they're trying to make a decision, I think right now. And they're waiting, you know, we're at this time where it's like, you know, it's still all eyes on COVID, right? Like it's how many people can we get vaccinated, right? Everything that happened in India happened pretty fast, I think. And I think that was like, oh man, I kind of thought we were done with this thing, or like, it was like going to wind down, and suddenly there's places in the world where it's not. And I think that, you know, I think people are looking at the inflation number and they're trying to figure out what that velocity number is going to be like. And when people get back out into the world, you know, naturally, you know, I guess a good example would be, you know, before World War II, you know, there was like 3% of the workforce was like women. And then, you know, during World War II, I think it was like 65 or 70%, right? And then after World War II, you know, it was 30%. Right, which is like, oh dang, that really fell. It's like, but it was still 10 times higher than it was before. And so there's this kind of like, you know, animal going through the snake changing. You know, it's like this thing that's changing everything. And So there was a paradigm shift. And so a lot of people are working from home. Everyone's an investor now. And so I don't think we're necessarily when people get back out in the world, I don't necessarily think that, they're suddenly going to forget about their money, right? And stop talking. If anything, it might increase the amount that people are talking about stuff to a certain extent. And so I think that's what a lot of people are waiting for, is just what happens in the next 3 months, right? Are there any uncertainties that come out? Are we going to continue to grow? Is inflation going to hit us hard? If it starts to, right now, we're not seeing it everywhere, right? You might be seeing it if you're a builder, you might be seeing it in materials, and we're now starting to see it in places like gas and oil. But, are we going to see it? Is it really going to affect people's pocketbooks when it comes to the price of a gallon of milk? And so I would say it's like, I'm looking at the same things. Like, these are all the things that I'm trying to, understand. And, I think that, there's just so many people in the world, right? And it's like crypto is getting out there, and it's like our space can continue to grow. It really can, for a long time. And I think that that's kind of what I'm still very bullish on, that fact. I think that there's just so many people, and it's so global, that it's going to continue to kind of pique the interest of everyone. And if someone can invest $5, and make a return, like the democratization of opportunity investments, like that's what's going to keep people here. And so it's like, that's kind of what I'm looking at, thinking like, yes, like the line that I always go back to, which I think I've said like 3 times today, and John's probably sick of hearing it, is, a lot of these projects are going to go away. Like, these are startups, like I said, but it doesn't mean that the innovation is going to go away, and people are going to try and like create their own spin on it and change it. And so I still think we're going to see a ton of growth, but it's just going to come from innovation. Did I get close enough, or did I still?
You nailed you. That was good. That was good.
Okay, I was like, did I still skate around it?
Yeah, that was less democratic, less political answer than the first time.
Good.
John, what did you say?
What was the specific question again? I got lost in Joe's answer.
So did I.
With the super cycle.
Super cycle. I think define cycle, because I'm going to talk about a few pieces. I mean, when we say super cycle, sure, like there's these macro narratives that have driven this, whether it be COVID, money printing, distrust in governments, whatever, but those haven't changed. And I think, like what I was saying about Bitcoin, how you've got a finite amount that's coming out there. Ethereum, you've got like big financial firms hoarding it. On the lower end, you've got users building things that are supposed to be used. And I think, you've got an infinite amount of projects being built that are pretty amazing. There's so many amazing things being built out there. I won't even go into names, but when you put it all together, and then you realize that, like, to throw a number out there, I mean, on a given day, approximately 500,000 people, unique people, are posting about crypto on social channels. It's only 500,000 people. Think of how many people there are in the world. So, and that includes with the whole like meme coin cycle and all of that stuff. We're talking 500,000 people.
Yeah, that's actually a lot less than I thought. Yeah.
Right. And think of the market cap, even though it's, I think right now we're 2.57 trillion. That's tiny. That's still not that big. When you think of the fact that this is not like any one country, this is the world. And then you layer in things like DeFi and the fact that we're at the start of enterprise adoption. I think that's probably the most underestimated piece in crypto, just period, is enterprise adoption. The scale at which like these big corporations are going to end up needing to use blockchain, and how that disrupts just business models in general. From startups through huge enterprises, business models are all about to change. And when you think of that disruption, it's so early. And I think, when you talk super cycle, I almost think this may be a cycle that outlasts all of our lives. That's how big I think this becomes. And so it doesn't mean it's not going to go higher and lower.
You heard it here first, ladies and gentlemen.
I mean, look, like let's put it this way. Let's talk about a little tiny company. We went through, Techstars a year and a half, 2 years ago. half the companies in there were like, yeah, we're gonna hook up Stripe and accept payments. They're gonna swipe their card and it's gonna be $9 a month. Okay, fast forward to today, with all that we know about crypto. Can you imagine doing that? Can you imagine today starting any business and going, we're just going to do a membership fee, $9. We're going to have a pricing page on our site, and everyone's going to be stoked to see that $9 a month charge on their credit card. It's dead. It's done. It's also done with traditional retail to ignore crypto. I mean, I give the example often about, like, imagine if there were like 5 coffee shops near you. In fact, there's 5 coffee shops near me. I live in Orange County. There's 5 coffee shops. I can walk to all of them. Now imagine a 6th one goes in, but this one has comparably good coffee, but they have a loyalty program that's token based, and that token appreciates, and it actually earns rewards, so much so that I don't even have to pay for coffee anymore because of others buying coffee. It goes into the value of the token. They thought through tokenomics from the perspective of a traditional brick and mortar business. Think of, like, we're going to fast forward a few years from now, and we're going to see those models come up in all the way down to retail, all the way down to little startups, and all the way up to enterprises. So imagine all that coming into play and saying, here we are we near a top? We're not even close. So that doesn't mean that price isn't going to fall. That doesn't mean at all. But if you think of this long term,
right,
we're not even close. Like,
yeah, I love how you guys,
so much more.
how you guys both keep the big picture in mind. I appreciate the way you guys think a lot. All right, last question before and I wanted to, everyone can go to lunarcrush.com. I'm going to put all that stuff on the video, but you guys are on Twitter, Telegram, Discord, LinkedIn, Facebook, Instagram, and did I miss anything? I think that's all.
Tumblr, Pinterest, WhatsApp.
Wow, you're on.
No, yeah.
Okay. Well, I screenshot it. I screenshot the website, and I think you could add it. You need to add a few icons, maybe. I gotta. This is the last question we're finishing on here. This is kind of a lighthearted one to end. On your page, you're talking about under the astronauts tab and your engineering team. You guys are all interested in certain things, but billiards. Who's the better billiards player between you two?
between John and I.
That's going to be referring to Isaac, who actually was pretty much a semi-professional pool player. He would win tournaments in Vegas, and nice. That's Isaac. But
okay, all right. I was just wondering.
I have a pool table when I was younger. I used to play pool every day.
Challenge him.
But Isaac would kill me.
I had to ask you. I love shooting billiards, so I was curious who I haven't played in over a year, but I was curious who the player was out of you two.
Yeah, neither. Unless I've got 1.5 beers or something,
yes.
and some good music going,
right?
And I can have a miracle game once in a while. But
I'm
not going to bet any money on it.
Yeah, you're feeling the vibes. I got
Yep.
you. Okay. I appreciate you guys coming on. Hopefully we can talk again. In another few months. Maybe we're still in a huge upswing here in 8 months, and even if we're not, we'll check in with you guys if that's all right.
All right, man. It's been a pleasure.
Yeah, I always appreciate your time.
All right, Earl. Take care, my man.
Say goodbye.